Okay, so for this next video lecture, so we will be discussing about audit procedures to perform or to be performed by the auditor in consideration of the entity's non-compliance with laws and regulations. So after the auditor have identified the existence of non-compliance that affects the FS or that has potentially misstating the FS, so these are the procedures that needs to be performed by the auditor. Okay, so as part of the risk assessment procedures, the auditor should obtain a general understanding of the legal and regulatory framework which is applicable to the entity and in the industry and how the entity is complying with that framework. Okay, so this is also an assessment of the existence of any non-compliance of the entity. The auditor should obtain sufficient appropriate audit evidence related to compliance, okay, and recognize to have a direct effect on the FS or if it will affect, okay, the presentation of the FS. So this audit or this sufficient appropriate audit evidence will support his assessment, okay, and will clarify any questions or doubts with regards to non-compliance of the entity with the laws and regulations. So the auditor should perform audit procedures to identify instances of non-compliance with other laws and regulations that may have a material effect on FS. So again, it is stated for how many times already that the auditor is responsible and should perform audit procedures to determine if there is non-compliance on the part of the client that will lead to material misstatement in the FS. So these procedures may include inquiry from the management and those charged with governance as to whether they are complying with laws and regulations. Aside from inquiry, documents showing their compliance may also be asked by the auditor to support his understanding. Another is inspection, okay, of the correspondence, or these are the documents already or communications with the relevant licensing or regulatory authorities requiring those laws and regulations. So during the course of the audit, the auditor should also remain alert for the possibility that other procedures may identify non-compliance or suspected non-compliance that will call his attention. Such procedures may include reading of minutes of meetings, inquiry of the in-house counsel or even an external legal counsel concerning litigations, okay, claims and assessment, and performing substantive tests of details to determine the amount that may pertain or relate to any penalties because of non-compliance of the entity. Moreover, the auditor should also obtain written representation from the management and those charged with governance that all known instances of non-compliance or suspected non-compliance have been disclosed to the auditor. So this is very important because in this case, if there would come a time where there is an instance of non-compliance by the entity and they did not discuss it or share with the auditor, so and the auditor, for example, have already finished the audit procedures and already furnished the auditor's report, and it has come to the auditor's attention that there is non-compliance which relates to a misstatement in the FS. So it would be a burden and a responsibility of the auditor because he did not detect it. and probably he relied on what the management has just shared to him. Okay, so in order for the auditor to have some evidence that he inquired of all these things from the management, so written representation will be a proof, okay, that all known instances by the entity of non-compliance are shared with. So this will be proof or an evidence of the auditor against the management later on will uh, if that will happen. Okay. So the International Ethics and Standard Boards of Accountants, or IESBA, Code of Ethics for Professional Accountants, which includes international independent standards, may also require the auditor to communicate the identified or suspected non-compliance to other auditors within a group or within their engagement team members, which includes a group of the engagement partner, competent auditors, or other auditors performing work at components of a group for purposes other than the audit of a group of the group financial statements. Meaning, in this case, if for example the entity has subsidiary or other entities related to them, so the auditor can share this non-compliance with those auditors who are handling their subsidiaries or related business entities. Okay, so those are the procedures that will be performed by the auditor in consideration of the entity's non-compliance with laws and regulations. Okay, so we will continue with the circumstances that may indicate non-compliance. This may be the risk factors that influence non-compliance. So examples of the types of information that may come to the auditor's attention that may indicate that there is non-compliance are the following. First is there is an investigation by the management departments, or there is payment of fines and penalties. So meaning if the entity paid for fines or penalties, meaning they have violated something, okay, or they did not comply with some rules or regulations. That's why they were sanctioned with fines and penalties. Another example is, or indication is, payments of unspecified services or loans to consultants, related parties, employees, or even government employees, maybe to settle their penalties or to ask from these consultants remedies on how to get away from the penalties or on how to resolve and to comply, okay, with those rules and regulations. Another is sales commissions or agents' fees that appear excessive in relation to those ordinarily paid by the entity to the services actually received. Probably, these are penalties or fines that were charged to sales commissions or agents' fees account to conceal that they have paid such fines or penalties. Another is purchases at prices significantly above or below market price. So here, there might be some non-compliance or even fraud, okay, that may exist in these cases. Another is unusual payments in cash, purchases in the form of cashier's checks payable to bearer, or transfers to numbered bank accounts. Okay, in fact, this may not only indicate non-compliance but also fraud. Okay, this cashier's checks payable to bearer, meaning there is no payee written in the check. So meaning whoever holds the check can encash it anytime. Okay, within the time frame of the encashment of the checks. Okay. Another is unusual transactions with companies registered in tax havens. Okay, so again, tax havens is a region or country which has lower taxes. So this is where the entity of a multinational company engage sales transactions to minimize tax. Okay. But in this case, not only non-compliance may be uncovered, but also fraud probably exists. Another is payments for goods or services made other than to the country from which goods and services originated. Okay, so in this case, this is some type of a international trade transactions of buying or selling. So in transferring goods from one country to another, so it requires some payments in or taxes. Okay, and there are rules and regulations to be followed as well before these transactions can be completed. But if they want to uh, um, fast track the transaction, so probably they are paying some commission or to the fixers or even smuggle these goods. Okay, so therefore they did not comply with the regulations. Okay, another is payments without proper exchange control documentation. So what is the payment for? Another is existence of an accounting system which fails, whether by design, to provide an adequate audit trail or sufficient evidence. So again, aside from uncovering non-compliance, it can also lead to um, finding out some fraudulent actions or activities here. Okay, so another is unauthorized transactions or improperly recorded transactions. So why did they conceal it? Okay, or even adverse media comment. Okay, so those are the different examples of the types of information that may come to the auditor's attention that may indicate the existence of non-compliance by the entity. Okay, so we will proceed with the auditor's response when non-compliance is identified or suspected. So when the auditor becomes aware of the information concerning possible non-compliance, the auditor should do the following. Okay, first, he should obtain understanding of the nature of the act and circumstances which it has occurred, and also gather sufficient other information to support such understanding. So this is like the assessment, okay, of the identification of non-compliance in our previous video lecture. Another is the auditor should also evaluate the possible effect of the non-compliance in the FS, okay, to determine any misstatements related to that non-compliance. Another is to discuss the matter, unless prohibited by law or regulations, with the appropriate level of management or to those charged with governance, okay, because they are the ones who are responsible for preventing, detecting, and correcting non-compliance. Another is the auditor should consider also the need to obtain legal advice if management do not provide satisfactory information. Okay, so he can ask some expert or legal counsels to what to do or what to respond, okay, or what to gather evidence or what evidence to gather. Another is the auditor should also consider the effect of the lack of audit evidence on the auditor's report. When adequate information about the suspected non-compliance cannot be obtained, so will it result into limitation of the gathering of evidence, or the auditor cannot gather appropriate sufficient audit evidence? So what he will do? Will he modify his opinion or withdraw from the engagement? Another is the auditor could also consider the implication of identified non-compliance in relation to other aspects of the audit, particularly the reliability of management representations, and to take appropriate actions also. So again, this might lead into modification of his opinion or withdrawing from engagement. Okay, so those are the different responses of the auditor with respect to non-compliance identified or suspected. Okay, so we will continue with auditors reporting responsibilities, with respect to identified and suspected non-compliance. So what or how should the auditor report this non-compliance? So the auditor should communicate, unless prohibited by law or regulation, with those charged with governance involving non-compliance that come to his attention during the course of performing the audit procedures, except those that are clearly inconsequential. Okay, meaning those non-compliance which do not affect FS. So if non-compliance is believed to be intentional and material, so the communication of that matter will be to those charged in governance, and it should be made as soon as possible. If the auditor suspects that the management or those charged with governance are involved in non-compliance, then the auditor should report this matter to the next higher level, if it exists, such as an audit committee or supervisory board. Okay, so this is the rule. If whoever is involved, the report should be made to those upper management, which is one step higher with those employees or management who are involved in such fraud or non-compliance. Another is where no higher authority exists, probably the top management or even the owners are involved in the non-compliance. So if the auditor believes that the communication may not be acted upon or is unsure as to the person to whom he will report these things, the auditor should consider the need to seek the legal advice of an attorney or legal advisor or counselor, what he will do, and what the steps that he will do or where to report such non-compliance. So in certain circumstances, the auditor may also consider withdrawing from the engagement. Okay, when the management or those charged with governance do not take remedial action, and the auditor considers necessary in the circumstances, or the identified non-compliance raises questions regarding the entity of the management or those charged with governance, even those non-compliance is not material to the FS. Okay, so if it involves the integrity of the management, then there is a big question there. So therefore, the auditor may withdraw from the engagement. Withdrawing from the engagement, however, is not a substitute for complying with other responsibilities, okay, under law, regulation, or relevant ethical requirements to respond to this identified non-compliance. So still, other responsibilities of the auditor, he should still perform this, okay, aside from withdrawing or even before withdrawing. Meaning, if the auditor have already exhausted all the means, okay, and lastly, there is nothing that he can do, so that's the time that he can withdraw from the engagement. So if the auditor concludes that the non-compliance has a material effect on FS and the matter has not been reflected in the FS, so the auditor should express either qualified or adverse opinion depending on the pervasiveness and materiality of the misstatement. If the auditor is precluded from or by the management from obtaining sufficient appropriate audit evidence, meaning the auditor cannot get sufficient audit evidence to evaluate whether non-compliance may be material to FS, then he can express qualified opinion or modify his opinion, either qualified or disclaim, meaning he will modify the opinion, or he will not provide any opinion at all. This is disclaimer of opinion on the FS because of the limitation of the scope, because he cannot get sufficient appropriate audit evidence in this case. And if the auditor is unable to determine whether non-compliance has occurred because of those limitations imposed by the management or those charged with governance, in this case, the auditor will or shall evaluate the effect on his opinion, or he may not provide any opinion at all. This is disclaimer, no opinion, okay, will be expressed because there is no evidence that will support his opinion in the first place. Okay, so those are the auditor's reporting responsibilities. And lastly, the auditor can even withdraw, okay, from the engagement. Okay, so the last part of this module is about the auditor's responsibility to report identified or suspected non-compliance to an appropriate authority outside of the entity. Okay, so this is reporting non-compliance with the proper authority or agency if this non-compliance is not resolved within the entity. So if the auditor has identified or suspected non-compliance, he should determine whether law, regulations, or relevant ethical requirements, okay, which requires the auditor to report this to an appropriate outside party, establish responsibilities under which reporting to an outside party may be appropriate. So he can ask the advice of a legal counselor or expert. Okay. For instance, the auditor of a government agency may be required to report non-compliance with laws, regulations, and provisions of contracts or agreements as part of the audit of the government agency's FS. Okay, so this is in the case of auditor of the government agencies. So in this case, the auditor should include the audit documentation that identifies for the identified or suspected non-compliance, and as well as document the audit procedures that he performed, his significant judgments made, as well as the conclusions that he reached, okay, based on the procedures, judgment, and the evidence that he gathered. Okay, so the auditor should also include in the documentation the discussions of significant matters related to non-compliance with management, those charged with governance, and others, and where applicable, their responses to those non-compliance. Okay, so this should be documented because in case there might be some misunderstanding or if the entity will file a case against the auditor, so he has the evidence to show his actions and opinion. Okay, so those are the auditor's responsibility to report identified non-compliant to an outside appropriate party.